Okay, quick Tuesday morning radar update. So I'm going to do something a little bit different. I'm just going to, in the end of day screening sessions, we've been talking process, and I'm just going to, I've just had to sign into one of the accounts this morning to update a stop date. So I'm going to basically do a little bit of a talk on, how to achieve these, results as we continually talk about holding the big winners, quitting the losers. I'm just going to show you the account what's got WATR in. It's one of a basket of really good stocks we've been riding this year and last year, I will say. So first things first, 250 through highs, inside day, and FTSE 100 just coming in after having a big move on Friday. There's not much in the volume leaders today, but if I get through this fast, I will jump into them. So if you're getting something from these videos, I'll just ask you just to acknowledge that, hit the like. If you like more of the same, hit the subscribe. I don't drop every day's video into YouTube, but it's quicker for me to drop it into chat, but I have been dropping it into YouTube recently. If you get something from it, just acknowledge it. I know there's enough people out there who actually like this. So moving on from that, a lot of process we've been talking, and a lot of money management, and I'm just going to bring up, this is the ISA what holds WATR. I run a couple of accounts, and this is the one what holds WATR. Nothing has changed in this portfolio. Talking WATR again, the last ad is not on this account either, because this account's been maxed out for the last how many months, 8 months or so. Nothing changed in the account. And this is year to date equity curve of those stocks. This is a fully invested account, and it's up 148.84%, whatever, at this point. I will add that I'm just trying to think what, I know you guys know I've got a few big winners in this account. One of the other big winners, what you think is probably in this account, is not in this account. So, how do you get there? Let's just jump straight over to WATR again. Nice clean sort of trend. So I bullheadedly do the opposite. I do what makes the most money. So here's a scenario. You do your research, the chart proves you right, and you make okay money. Well, that's not good enough, You might as well just dollar cost average an S&P tracker or whatever. When you're right, you've got to be paid. You want to be paid. So we talk about weightings a lot. I don't split my account, dozens of ways. I do have 21 positions in the account at the moment, and that's a lot for me. I would say the happy place is probably between 15 and 18 or something like that. It's always a process of taking low risk entries. If they let you add to them, it builds into a core position. Now, also, I talk about going on the gas as well, and it's you've got to remember, new people to the markets tend to go on the gas without even knowing it. They just take too much risk. They don't let the stock or the trend sort of let that position turn into an on the gas position. They just go on the gas. That gets you killed. Weighting should be earned in the market. Also, I would just, this was the first look at this stock. I didn't get it in it till here. I went on the gas. I added to it also early on the gas. I've added to it 3 times and 1 on the gas entry. My last ad was here. It's not actually on the account I've just shown you because that account was maxed out for some time. It's actually on a margin account, the ad. Next thing is I will say anywhere, as long as it's, anywhere in this right hand side circle is very normal action. It might want to do an early retrace, who knows, So, that is the trend I'm trying to capture. When I'm right, I want to be right big. Sometimes I go on the gas. Now, I had money running since I was a kid. I had Peps. I used to dollar cost average into Peps, a basket of Peps. What turned into ISAs. I had money running through the tech bubble. I had money running through the GFC. And, 2011 was a horrible volatile period. Every, market leg I've had money running through this. So the new investor will be very skittish. The seasoned sort of one who's seen how the market can react will have a bit more respect for risk. Now, having respect for risk and me going on the gas here, I still have respect for risk, but I know exactly where I'm wrong. I know how to position size. I know the risk on account. I know all these things. And we talk about weightings a lot. I don't want to put 1% of my account in something. I want to put, I'd say in a stock, in a higher price stock, it's going to be a minimum of say 3.5, and a maximum of on the first maybe of about 7%. If I'm on the gas, it's going to be up high. If I'm not on the gas, it's going to be a little bit lower. If I add to it early, it will move higher again. Talking weightings here, not talking putting just 1% of account in something or 7%. Sorry, I'm not talking risking 1% of account or risking 7%. I'm talking, the weighting of that initial position. The risk will always be low. So my initial risk could be 1%. If I'm on the gas, it could be 2%. It could be anything in between. But I want to get a weighting in this stock, what will pay me when I'm really right. And, when something really lines up, growth and technicals, the place where we do business, really line up, and then you are proved right by the stock stair-stepping higher, I'm going to be adding, trailing and adding. And this area here trailed the heat out here, and even adding here does not result in a loser if it's wrong. It locks some profit still. So what am I trying to get across here? If you've got a fear of winning stocks, the worst thing you can do when you are right, all the stars align, you are right, the market is in a fantastic sort of zone and is just prune the living. Every time a new bud forms, you prune it. So I'll just show you, this area here, July and August, the fear in the market was unbelievable back here. But growth stocks were emerging. We were doing the exact opposite of common consensus. And the more you study price action, the longer you've had money running in the markets, and the more you study volatile stocks, the more desensitized you'll get towards this kind of stuff. The more sort of expert opinions you get on this stuff, the more it's going to cloud your judgment. You've got to trade on what you've learned and what you know, and basically you've got to execute those real good opportunities, and you've got to get paid big when they really do play out. So here's the worst way you could sort of take a trade like this. You put small percent, say you put 2% of your portfolio in it, and then you halve it because it makes a strong run, and then you keep halving it again and halving it again and halving it again. Now, it will make you an okay multiple. It'll probably make you 4, 5, 6R maximum. But, you know, if that, I would say, if that. But if you do the exact opposite of, you know, trail and add, get on that trend early and never water down how right you are. Do the exact opposite. You know, that's how you're going to achieve making a lot of money in an outlier. Now, I'll just throw this out there again. This could halve tomorrow and it would make more money than taking a small weighting on the account and keep trimming that small weighting. It could halve tomorrow and totally eclipse the profit you get out of the other methodology. So, you know, if you want to achieve really good results in a really good market, and you don't know how good the market's going to be, but I know if I bullheadedly, you know, do what mathematically makes the good money on the lowest risk, it's not what feels the best. You know, it's never going to feel good doing the right thing in the markets. I promise you that. Otherwise, 90% of investors would be killing it. You know, it never feels good. Now, all the way up, people have been sort of the old, you know, ooh this, ooh that, and, you know, scare tactics. Guess what? You know, every big winner on the account I've ever had has had that all the way up. Upgrades, downgrades, dozens of them. You know, every big winner will have that all the way up. Clever opinions or some very simple maths of what makes good returns. So if you want to make good returns, you've got to dig into those spreadsheets and just look at how you can pyramid into a position on low risk. If your research is right, and you know, you can achieve this in the worst stocks or the best stocks when it comes down to quality. You know, the math works for everything. It really does. You know, this is one what jumped into my screens because it was one of the growth leaders in the UK, and when I say that, it compared against all other growth stocks, this was right up there. So, you know, it's one stock out of a basket of fantastic runners what we're riding at the moment, and you know, I just want to get that across. It's the exact opposite of the feel good factor everyone shows you. If you don't want to get average results out of a better than average outlying stock, you want to knock it out of the park results, you can do it on low risk. The weighting is meaningless. I mean, there becomes a point where you know it's such a large position in the account where it, you know, I don't look at weightings. I know my initial weighting and I know my initial risk, and I know, you know, the bigger the percent cushion, the bigger the say the bigger the sort of slippage this stock could have. It could halve in price overnight and it will still be a big winner. It will go on the closed balance of the account. The account risk will compound up to a new level. So be it. You know, it is what it is. So, you know, that's what I wanted to get over in this. If you're gonna make big winners, big returns, big winners in small cap growth stocks, you know, you can't be scared of profit. You can't be scared of weightings. Vol targeting is the worst thing I could do in a portfolio of growth stocks. So hopefully I haven't cursed WATR. Anywhere in the right hand side is normal action. It is what it is. But I just wanted to get that over in a, you know, you can see how that it can really snowball the account. Now, you know, what about take some off the table and put it into another stock? Well, this is the best stock at the moment. You know, I should be adding to this one. I have added to this one, you know. So that's obviously from a low risk area. I was just putting that on the end. I just wanted to get that over and show you the account, what this stock is in, and you know how much profit is on that account. Fully invested account up plus whatever today. And you know, I only know this because I signed in today to update a stock, but you know, I know the account balance on the spreadsheet for the whole thing. But I will leave that there, and I will run the volume leaders and I will drop it into the chat. Okay.